So it's another perfect evening, students, of financial reporting and analysis we meet. So today I would like to look at the international public sector accounting standards, which we will look at the international public sector accounting standards 1, and I will look at the international public sector accounting standards 24. So under international public sector accounting standards 1, I will look at statement of financial performance, how it's done, and the statement of financial position, of which I will be able to start with the sitting question. It's a question of the same kind which was tested. So there was a question from that topic, that is, which was tested sitting. That is the sitting of April 2024. But before we do that, I would like to make some few notes. Then we look at those statements. We look at how those statements, the statement of financial performance and the statement of financial position, how they are prepared according to the IPSAS 1. So remember that when we talk about IPSAS, so there are standards. So IPSAS are standards. So IPSAS are standards. Then what? Are standards developed by the IPSAS board. They are developed by IPSAS board. Developed by IPSAS board. So they were developed by the IPSAS board to ensure that there is uniformity. To ensure that there is uniformity. To ensure that there is uniformity in the manner in which the public sector, organization prepares their financial statements. So remember that when we are preparing statements like financial performance, statement of financial performance and statement of financial position, we have to follow the IPSAS, so the standards. So remember that once we follow the standards, the statements prepared are uniform. From one public sector organization to another, they will be uniform. So they have to follow those relevant standards. So there is uniformity. So to ensure that there is uniformity. So we can look at the advantages. So which are some of the advantages you can mention? Advantages of adopting IPSAS. Why can we adopt IPSAS? Advantages of adopting IPSAS. What are some of the advantages? There is one, I have said, it does what? Promotes uniformity. It promotes uniformity. That is number one. Number two, it enhances transparency and accountability in the public sector. Transparency and accountability in the public what? In the public sector. So once we follow those standards, there will be transparency and accountability in the public sector. So Amani, kindly mute your mic. Number three, they enables developing countries to access cheap lending from IMF and World Bank. Enable the developing countries to do what? To access cheap rendings. Cheap rendings from, like now Kenya. So we always get these loans. So the IPSAS enable developing countries to access cheap lending from the IMF and the World Bank. And the World Bank. And the World Bank. Another advantage you can mention, guys, number 4. So it does what? Promotes the image. You can see that it promotes the image. It promotes the image of a country. Promotes the image of the country in the eyes of the international community. In the eyes of international what? In the eyes of international community. In the eyes of international community. So remember that these are our advantages. So we have said that it promotes uniformity, enhances transparency, accountability, and accountability in the public sector. So there's someone asking that if the recording would be shared. Yes, it would be shared. So another number 3 is all about enables developing countries to access cheap lendings from IMF and World Bank and promotes the image of the country in the eyes of international what? In the eyes of international community. So other than advantages, we can talk about challenges. So the challenges. So what are some of the challenges of adopting IPSAS? Challenges of adopting IPSAS. What are some of the challenges you can get in adopting the international public sector accounting standards? So right now we have the aspect of law, the legal what? Legal barriers. The legal barriers. Remember that the registrations from one country to another, they are not the same. Our laws and the laws of our neighbors are not the same. Our law and the law of South Africa are not the same. So the legal barriers, different countries have different what? Laws governing the preparations of the financial statements. Then we have initial implementation cost may be expensive for developing countries. So the cost, we can talk about the cost. So the initial implementation cost may be expensive for the developing countries. Number 3, what can we mention? What are the challenges of adopting IPSAS? Another? So this is resistant to what? Resistant to change by government employees. Resistant to change by government employees. By government employees. Resistance to change by the government employees. Then we have another one right now, language barriers. So a language can be another challenge. So remember that we don't use one language worldwide. So there's even countries which use French. Number 5, another challenge. Challenges of adopting IPSAS. Another. So there's these political what? So also political instabilities can affect the IPSAS. Political instabilities. So political instabilities. So NB. Anyway, you heard today when they were doing what? When they were reading the budget, they mentioned something about accrual concept of accounting. We are moving from the cash to what? Accrual concept of accounting. What does they mean? What does that one mean? So when preparing these statements, IPSAS focuses on what? IPSAS focuses on accrual concept of accounting. So that is not a challenge, but this is a main thing you need to know. So IPSAS focuses on the accrual concept of accounting. So right now, for example, when we talk about accrual concept of accounting, I can give an example of a certain expense which an organization can incur. Are we supposed to account for that expense now before we pay, or we have to pay, then we recognize? So for the accrual concept of accounting, if it's an income we expect to receive, you have to recognize that income even if you have not received it. So it will be easier for tracing. So we will have a good trail when we use the accrual concept of accounting. You don't have to pay a certain expense, then you account. No. If you know that at the end of the month you are paying rent, you can account it before you do what? You pay. So it will be able to assist you in terms of trading what you are supposed to do. So you will have a good trail. So main focus for this one, IPSAS, my main focus will be, so in this IPSAS, my main focus will be IPSAS 1. I think I mentioned that. Remember, IPSAS means International Public Sector Accounting Standards, this one here. So my main focus will be IPSAS 1. So IPSAS 1, I will be looking at some presentations of financial statements, presentation of financial statements, presentation of financial what? Financial statements. Presentation of financial statements. But for today, I will not look at all of them. I will be able to look at only a statement of financial performance and a statement of financial position. The number 2, I said I will look at IPSAS. IPSAS 24. IPSAS 24 is budget what? Budget preparation. Budget preparation. So I can start with IPSAS 1. And once we are done with IPSAS 1, we look at IPSAS 24. So for IPSAS 1, presentations of financial statements. So for this session of ours today, IPSAS 1. So IPSAS 1, I will be able to look at a statement of financial performance. Statement of financial performance. And I will look at a statement of financial position. For the others, like statement of changes in net assets, I will be able to look at them later. So statement of financial performance and a statement of what? Statement of financial position. Statement of financial position. So for us to address this issue, I will start with our sitting, April 2024 sitting. So this question was number, also in my case, I have the copy version of this question. This question is number 5. It was having how many marks? It was having 12 marks. So these two statements. So, and you will be able to see how easier was these statements. How easy you are supposed to prepare these statements. For the student who did this sitting, this paper was very easy, because if they are giving you the statement of financial performance, then you prepare statement of financial position. Then on the other side, you have a statement of changes in net assets from the retirement schemes. Then we have group. We have anyway. For now, let's continue. Let's know how these ones are done. So April 2024, question 5. So this is question 5A. So I think you have the sitting past paper. The sitting paper, you have it. If you don't have, I can share to the group and we do it. So I have shared the question to the group for the students following. So there is a group, So for this one, This is the question. It's question 5A. They were saying that the following information was extracted from the financial records of the Ministry of Public Works for the fiscal year ended 30th June 2023. So you can see we have accumulated fund, transfer from the exchequer. What's an exchequer? What's an exchequer? There's no guys from the government in this session. What's an exchequer?
It is maybe like the treasury, the national treasury.
No, can you say that it's just the national treasury? A good explanation. What's an exchequer?
Can you say it's an account that is maintained by the central bank for all revenues payable to the government?
Yes, that is correct. That is a good explanation. So transfer in from we have a transfer in from exchequer, transfer in from other ministries, transfer out to other ministries, fines and penalties, wages, salaries, and other emoluments, finance expenses, supplies consumed, revenue from exchange transactions, premises, motor vehicle, computer and accessories, furniture and equipment, receivables, cash and cash equivalents, payables, long-term borrowings. Then you are told that prepare the following financial statements for the Ministry of Public Works for the fiscal year ended 30th June 2023, in accordance with the IPSAS 1, presentation of financial statements. So statement of financial performance, and also they need statement of financial position. Statement of financial position. So let's look at them. So let's do them. Even look at those questions. Already we have looked at the questions. Now we present statement of financial performance and statement of financial position. So this one, this ministry, it's Ministry of Public Works. Ministry of Public Works. So you come here and say Ministry of Public Works. Ministry of Public Works. It's Ministry of Public what? Public Works. Statement of financial performance. Statement of financial what? Statement of financial performance for the year. For the year ended 30th June 2023. 30th June 2023. So 30th June 2023. So you can see your shillings in millions. You can have two columns. And we have shillings in what? In millions. We have the two. So remember that the first thing we look at is the revenue. Revenue. So this Ministry of Public Works, the revenue it was getting. So we start with revenue. So which revenue can you see? So the revenue or the income, just the same thing. Remember that there was some money it was getting from the exchequer account, the consolidated account, which is maintained by the central bank. So there's that money which they were receiving. Transfer in from. See, that is what they receive. Transfer in from exchequer. So that amount was, can tell me the value?
6320.
6320. Another income you can see under that question. So the other ministries were transfer in from
other ministries.
Other ministries. So other ministry are transferring to this ministry. So that is an income, that is a revenue to them. So that is 18, 70. Then which other income? Just simple knowledge you will use to tell me which other income is there. So remember, this is a Ministry of Public Works. See, there's those fines. So fines and penalties. That is an income. So there's fines and the penalties. Due to the fines and the penalties, there's money this ministry is getting. Like now, let's say Ministry of Transport. See, there's those fines and penalties they always give, maybe to the people on vehicles due to maybe a certain mistake you have done. So we have the NTSA under that ministry. So if there's those mistakes you have done, you are given some penalties or fines. That is a revenue to them. That is a revenue. So these are fines and penalties. Fines and penalties. So fines and penalties, the amount 22, 40. Another? There is that revenue from what? Revenue from exchange transactions. Yes, exchange transactions. The amount is 67.
Yes.
6730. So those are some of the revenues. Give me the total. Add the total. Then after the total, we look at the expenditure. We look at some of the expenditure which are present. So it was just classification. Expenditure. So what do you have here?
17,160.
17,160. Then now for the expenditure, we have the transfer out. So it's transfer out to other ministries. Transfer out to other ministries. Transfer out to other ministries. The amount is 800 and what?
Which is a service and nothing.
Sorry? Is a question?
It's
60.
So other than we have wages. From the question, I can see there's wages, salaries, and what?
Wages, salaries,
Salaries and other emoluments.
Other.
And other, they call it other emoluments.
Yes.
So this one is 1960.
160.
1960.
Yes.
Another expense from the question? Another expense from the question? I can see we have
expenses.
Supplies done what? Supplies?
Finance expense.
Yes, it's okay. I will record even that one. Supplies consumed. So we have shillings in million. So supplies consumed, the amount is 1790. Then we have finance expenses.
1790.
Yes, finance expenses, that is 680. 680. So give me the total expenses. 860 plus 1960 plus 1790 plus 680. The total is? I can just give you time to give me the total. You have enough time. Just pressing your calculator. 860 plus 1960 plus 1790 plus 680. What's the amount? What I have to do?
5290.
5290.
52. Yes.
So now you have a revenue of 17,160. Then you have an expenditure of 52,90. So what is a surplus or a deficit? Do we have a surplus or a deficit? Obviously, the expense is less than the revenue. So that is a surplus. Huh? That is a surplus. So the surplus of 17,160 minus 52,90. We have a surplus of 11,870. That is a surplus. So remember that this one was A Roman 1 was having 6 marks. So how are they marking this one? You see these entries you have done. 1, 2, 3, 4, 5, 6, 7, 8. You see out of the 8, they need any 6. So multiply by 1 mark each. Any 6 correct entries, you get your 6 marks. So let's look at a statement of a financial position. So we say Ministry of Public Works. Ministry of Public Works. So statement of what? Statement of financial position. So this one is as at. Remember, our financial year was ending June, as at 30th June 2023. As at 30th June 2023. So as at 30th June 2023. So this one we can have 1 column. So shillings in million. So we start with assets. We look at assets. We look at various assets. Which assets do you have? But now assets you classify. We start with non-current assets. Non-current assets. So which are some of the non-current assets you have in that question?
Premises.
Yes. Premises.
Premises.
You have the premises. So the amount?
2350.
So we have the premises. So premises, you have said it's at 26,390. So 26,390. Another non-current asset? Motor vehicle. So motor vehicle is stated at, according to the question, it's stated at 20,350. 20,350. Then after motor vehicle, we have furniture and equipment. So the furniture and equipment is stated at 33,20. After that, I can see we have computer and accessories. Computer and accessories. So that is 14,30. So the total non-current assets, 26,390 plus 20,350 plus 33,20 plus 14,30. That is 51,490. 51,490. Then we go to the current assets. So current assets. So which are some of the current assets? So from the question, I can see we have debtors, so the receivables, that is. So the value of the receivables, 13,680. And we have cash and cash equivalent. Cash and cash equivalent. So the cash and cash equivalents, 12,90. So here we have total. You can say total assets. So the total assets, if you add 13,680 and 1290 to 51,490, that is 66,460. 66,460. So those are assets. So we can go ahead and do the part of liabilities. So we look at some of the liabilities there. But remember, before liabilities, we have to look at some accumulated what? Accumulated fund. So we say accumulated fund and liabilities. Accumulated funds and liabilities. So the accumulated funds and liabilities. So the accumulated funds and liabilities. So which is the accumulated fund brought forward? Accumulated fund brought forward. The accumulated fund brought forward. Accumulated fund brought forward. It's there, it's just there directly. Because our financial year ends when? 30th June. So it starts on 1st July 2022. So the accumulated fund as at that date?
17,850.
17,850. That is the accumulated fund brought forward. Then after that, remember there is this surplus for the year. So you add surplus for the year. So the surplus for the year is 11,870. 11,870. So that we get the accumulated what? Accumulated fund brought for, that is, this one is brought forward. So that we have a carried forward. Carried forward. So add that. So do the summation. 17,850 plus 11,870. That is 29,700 and what? 20. We go ahead and look at liabilities. So non-current liability, any non-current liability? Any non-current liabilities?
Yes.
Long-term borrowings.
We have long-term borrowings. We have the long-term borrowings. So the long-term borrowings is 29,600. Then current liabilities. Current
Payables.
liabilities. We have the payables. Only that. So that is 71,40. So up to that point, we have total. You can say total funds and liabilities. So the total fund is 29,720 plus total funds and liabilities. Total funds and liabilities. Is it balancing with the assets at 66,460? Does it balance?
Yes.
So we have
Balance.
66 or 60. You can say
For
how
60.
easy was this question. So like now this one again is 6 marks. So they look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that is 10. They need any 6. Any 6, they multiply by 1, you get your 6 marks. 6 marks. So that is how this for April This is April 2024, question 5A. So B was not IPSAS 1. B was other things. So that B will be done later when we are in that topic. So what we can do, we can go to September. We can look at the September question. So the September question, so that is September 2015, question 5. September 2015.
Another question.
Mhm.
Under public sector accounting, the non-current assets are not depreciated.
The non-current assets are not depreciated in the public sector accounting. So remember that in this question, it means that these assets, the values they have provided, they are already subjected to depreciation. So you don't have to depreciate. There's no asset which doesn't depreciate. So already, like they give you values at net book value, which are already subjected to a depreciation. So they are not going ahead to tell you that in this question they never told you that you depreciate. But if they could have mentioned that you depreciate, you have to depreciate. There's no asset which doesn't depreciate. That is okay.
It's okay. It's okay.
I think John, everything is clear for the other students because I can see John is saying something under the comment section. Are you seeing my
Yes,
screen?
it is.
Clearly?
Yeah. It was
Yes.
just for a short while. Yeah.
Or maybe it was due to network issues. So we can look at September 2015. So let me share the past paper again. So this September 2015 question 5, this is how it looks like. It's just meaning that I sitting, they copy pasted from this sitting. So they said the following information was extracted from the books of Ministry of Tourism for the fiscal year ended 30 June 2015. Accumulated funds, it was like accumulated fund was there. Cash and cash equivalent receivable inventories of consumables, transfer from exchequer, fees, fines and license, liability for long-term benefits, long-term borrowings, finance costs, supplies and consumables used, wages and salaries, other expenses, transfer from other ministries, transfer to water ministries, computer equipment, vehicle, land and buildings, revenue from exchange transactions, other revenue, payables. We have reserve. So they need a statement of financial performance and a statement of financial position. Is there anything which you cannot be able to do here? Or do we just do very fast? I want to hear from you. What do you think? You are silent. I can just do it very fast so that we don't waste a lot of time doing the same things. Is there any student who did this exam and are sitting? Sorry. I think you can now realize how easy it is. Even also, I will do group also. Those all the questions which were done in our sitting, I will do them. I will do that group question. I already have done this part of it. The one I've shared online is which one? It's a question I've done and shared online. Of the students who have looked at it. I have done the IS1 published. There was published, there was accounting for income taxes. There's this IPSAS 1. Then there's these retirement schemes, the preparations of changes in net assets and statement of net assets. I think that this is the next one. I will look at these. the statement of changes in net assets and the statement of net assets. That is the next area after I'm done with these statement of financial performance, statement of financial position, and the budget. I will go to the statement of changes in net assets and the statement of net assets. So let's look at September 2015. We just do it very fast because it's something which you know. So it's Ministry of what? Tourism. Ministry of Tourism. The Ministry of Tourism. Statement of financial performance. Statement of financial performance. Statement of financial performance. So that is for the year. Statement of financial performance. Our year was ending 30th June 2015. 30th June 2015. So we have shillings there and the shillings. So shillings. It's in thousands and say in thousands. So I said we start from revenue. Or you can decide to say income. There is no arm. So which are some of the revenues? Transfer from exchequer. The amount. Give me the amount very fast. Transfer from exchequer.
1,875,000.
Yeah. There is a fees, fines, and license.
375,000.
Fees, fines, and license. 375,000.
Yes.
And I can see transfer from other ministries.
So that's 7,500.
Transfer from other ministries. So the transfer from other ministries, 37,500.
Yes.
Revenue from exchange. Revenue from exchange.
Transactions. 75,000.
75,000.
Yes.
Then there is other revenue.
Yes. 450.
For 50,000. So what you do, we get the total there. Then we look at the expenditure. Some of the expenditures. So the finance, expense or costs. You can say finance cost. 75,000.
Yes.
Supplies
Also,
and the consumables used. This one is
300,000.
300,000.
300,000.
Aye. Wages and salaries. I can see we have wages and salaries.
750,000.
750,000.
Yes.
After that, we have other expenses.
Mm,
Other expenses, that is
900,000.
900,000. Another expense I have not captured.
Transfers to other
Transfer
ministries.
to other ministries.
Transfer to other ministries. That is transferred to other ministries. So the amount
375,000.
375,000. See, you do the summation. Oh, the total incomes. Have you done? The total incomes 1875 plus 375 plus 37.5.
2,775,000.
2 million
775,000.
incomes.
Yes.
Is it 2 million? Someone confirm. You have said 2 million?
775,000.
On my case, I'm getting 2,812,500. You see, this one is the correct one.
Okay.
Expenditures. So that is 375 plus 750 plus 900 plus 375. 2.4, eh? So meaning that this one is more. The revenues is more than the expenditure. So that is our surplus. We have a surplus of 412,500, eh? That is surplus for the year. We do the statement of financial position. So we say Ministry of Tourism. Statement of financial position. The statement of financial position as at, that is as at 30th June 2015. So we have shillings in thousands. So assets, we look at non-current assets. So according to the question, which are some of the non-current assets present?
Computer equipment,
We have the computer equipment. So the value, 200,000.
175. Oh, 200. Yeah, 200,000.
Vehicle,
175,000.
175,000. So the vehicle is 175. Land and building,
2,625,000.
so you will be able to get those total non-current assets. Then current assets, so which are some of the current assets?
Cash and cash equivalents,
Cash and cash equivalent,
Cash and cash equivalents. So the amount, 375,000.
375.
Another,
Receivables,
receivables, the value,
150,000.
150,000. Then
Inventory of consumables,
inventory of consumables. So inventory of consumables, 75,000.
yes.
Give me the total assets. You can get the total assets here. You can do the total assets. So we continue on the other side. I think you are done with this. Huh?
Yes.
So here, so I said we look at accumulated what?
funds and
Fund, eh?
liabilities.
Accumulated fund and liabilities. So is the accumulated fund balance brought forward?
We shall assume the 562.
Sorry?
We assume the 562, 500.
We assume?
The accumulated funds,
Yes.
562,
So
500.
that is accumulated fund. So we have accumulated fund. So I can just say accumulated fund. That is
562, 500.
562, 500. Then we add surplus for the year. So this brought forward. So we add surplus for the year. So the surplus for the year, that is for 12, 500. So that we get accumulated fund carried forward. Then is there non-current liabilities? Is there any borrowings?
Long-term borrowing.
So there was long-term borrowing. Huh?
Yes.
But there's also that liability for the
For
long-term
long-term
benefits. Huh?
Yes.
So this one is the value.
150,000.
So this is 150,000. Then long-term borrowings.
750.
750,000.
Yes.
Was there any current liabilities? It was there payables. Eh?
Yeah, but yeah.
So current liabilities.
375,000.
We have the payables of 3.
75.
So total fund and liabilities. So it's balancing out. So total assets, you can confirm if it's balancing. Because it's 200 plus 175 plus 26, 25 plus 375 plus 150 plus 75. So this one is 3.6. That's correct.
Yes.
So 562, 500 plus 412, 500 is 975,000 plus 900,000. The two is 900,000 plus 375. It's not balancing, huh?
The reserves, though, sir.
Or there's something we never recorded. Eh?
Reserves.
So there's reserves, huh? Reserves which we ignored. So which is supposed to be here. So add reserves here. So include reserves here.
Yes.
So the value of the reserves,
It's a 1,350,000.
1350. Eh?
Yes.
So if you add that one, it will be 3.6.
Sure. It will be balancing.
Yes, plus in 1350. It's okay. So this is the one which we never recorded. We had skipped it. So that is it. That is it. According to IPSAS what? For now, for
IPSAS
IPSAS 1, you know how to prepare statement of financial position and a statement of financial performance. So I would like to look at IPSAS 24. So I said IPSAS 24 concerns what? Preparation of the budget. And it's something very easier and direct to the point. So for that budget, I will look at December. So there's someone commenting something. But if it's some personal issues, you just mute kindly. So let's look at that. IPSAS 24. There's someone who joined yesterday and he was asking, where is the public sector? I think I have answered your question. The new student who joined, it's from Nandi or where? Not from Northeastern. So IPSAS 24 is all about budget presentation or preparation. I would say preparation. See, for the budget, we look at receipts and payments. So you have to look at what you are receiving. Then you look at payments. So you have to compare the actual budget and the actual and the budgeted. So now that we have the budget and we have the actual. Remember that today we had a budget of 4 trillion in Kenya. I know the guys from Rwanda. Your current financial year budget is the same as Kenya. Ama namna gani? I know there's around 3 guys from Rwanda. Quisera, how are you?
I'm fine.
Your financial year starts when?
Oh, our financial year still starts on 1st July.
So you have a new budget of how many Rwandanese franc?
It's 5,030 billion Rwandan francs.
530 billion.
Yes, 0.1.
530.
5030.1 billion.
That is 0.1 billion.
There is a 0 between 5 and 3.
50-30.
Yes.
That way.
Yes.
5,030.
Yes.
If you convert this to Kenyan, it will be, you divide by how much? You divide by 20 or 10. You divide by 20.
10,
Oh, almost 9.
9, 10, like almost.
Divide by 9.
By 9 or 10.
So let's look at budget preparations. So December 2013. I think you have the past papers for those previous years. So IPSAS 24, we look at budget preparation, December 2013, question 5B. Something very simple. So question 5 generally was according to IPSAS, not even B only. With reference to international public sector accounting standards, explain 4 benefits that will accrue to your country from adopting IPSAS. So we mentioned advantages of adopting IPSAS. So I mentioned about them, about the benefits, 4 benefits that could accrue.
Yes.
Yes.
Said that promotes uniformity, enhances transparency and accountability in the public sector, enables developing countries to access cheap lendings from IMF and World Bank, promotes the image of a country in the eyes of the international community. Then describe 3 challenges your country could face in adopting accrual accounting practices. You can see now how they are trying to challenge you. They are just trying to do a twist to the question that describe the challenges that your country could face in adopting accrual accounting practices. These are, I said, IPSAS, that's what focuses on the accrual concept of accounting. So meaning that they just need the challenges of adopting the IPSAS. Because IPSAS does what? Focuses on the accrual concept of accounting. We said things like legal barriers, the cost of implementation. We talked about things like resistance to change by the government employees. I went ahead to talk about language barriers, political instabilities. So you have them. Number B, that is the area of concern. So the following information was obtained from the Ministry of Finance for the financial year ended 30 June 2012. We have the budget and the actual. So we have the receipts from taxes. We budgeted to receive 600, we received 552. So nevertheless, for the budget, it has to be favorable advance. Did we attain? We expected that from taxes, like now from taxes, Kenya, for us to raise 4 trillion, we need which revenue from taxes? It was 3-point-something trillion. In general, we will be able to raise 3-point-something trillion. So that a deficit of, you need to know, you are finance guys. So we have borrowings. Remember, they have to borrow. You can do national or foreign borrowings. Grants. Remember, there's those monies you are given by IMF and World Bank. You have been seeing the president going out. So sometimes they receive some grants from those IMF and World Bank, or from even developed countries like the US. You know, the other day, I think there was money Kenya received from the US after the visit of the current president. So other government agencies. So payments to education, defense. So you have to budget, then you see, have you attained actually? Defense. So it's something not difficult. The government transition planning cost, health, housing, internal security, others. So required budget outturn for the Ministry of Finance for the year ended 30 June 2012 in accordance with the requirements of IPSAS 24. Presentation of budget information in the financial statements. So we can do that very fast, very fast. So we can do that. So what you do, just writing the heading. So Ministry of, so it's Ministry of Finance. So Ministry of Finance. So budget information, the budget information. Budget information. So for the budget information, so that is for the year. For the year ended. For the year ended 30 June 2020 what? 2012.
2012.
So we just start with receipts. So we write here receipts, what they were receiving. But now you have to look at the budget and the actual. You compare so that there is a variance. The variance can be,
Positive or negative?
yes, positive or negative, but we say there's a word we use. I'm not aware. Favorable or
Favorable.
adverse?
Adverse.
Favorable or adverse? So revenue from taxes, our budget was 600,000. And the actual one we received from taxes is 552,000. So meaning that this one we received less than what we budgeted. So there is an advance of, we say A. A stands for advance. Advance, then F will be favorable. So we received less than what we budgeted. The next one, borrowings. We were supposed to borrow, but national or a foreign. So the national borrowings, 400,000.
Yes.
But now we did what? We received
Eight. Eight.
we received less, by
Yes.
this
20,000.
to
20,000.
20,000. So that is an advance.
Yes.
A foreign, we budgeted to borrow
Also,
foreign 160. We did what?
60,000.
go 320.
320.
So this is favorable. We got more than what we need. It's double,
160.
So this is favorable.
Mhm.
That is favorable. We have grants, IMF and World Bank. So we were to receive, we buy that IMF or World Bank would give us 80,000, but it gave us how much? More.
100.
So that is favorable by 20,000. Then other government agencies, what we want to receive from other government agencies. So we budgeted that we will receive 600,000. 60.
60.
60.
Yes.
We received 64.
64.
That is favorable by 4,000.
Yes.
Favorable by 4,000. You can get the totals, but remember when you are computing for this, the advance you minus from the favorable. So this one is, so I can say 160 plus 24, and I minus 68.
40.
116, Is it 116?
Yes.
Yes.
So that is favorable. So 600 plus 400 plus 160 plus 80 plus 60.
1,300,000.
Hmm?
1,300,000.
This is 1.3.
Yes.
552 plus 380 plus 320 plus 100 plus 64. This is for 1.4. Then we look at what? In fact, you will find that something like this is in your exam, then you find a student saying that the exam was difficult. No, the teacher will wonder. And now you have seen what we have done, the statement of financial performance and the statement of financial position, IPSAS 1. Are those questions difficult in any manner?
Mm.
That's why I said these small topics are very easier, and nowadays I can see they test them a lot. That is why we have to do them before we go to the wide topics, the regs of group, the regs of cash flows, the regs of published, the IS1, the regs of partnership, the regs of financial analysis. So payments, what about payments? Education, so we have the budget, actual, and the variance. So shillings. So education. So payments to education, the budget was,
600,
but the payment they made is.
536.
So is that favorable or advance? How much is a payment? Yes, that is favorable. These are payments. So they paid less by
64.
that is
64.
64,000. So that is favorable. Remember, these are payments. So they paid less than what they budgeted. That is the education. Then defense, they budgeted 120,000.
120.
They paid.
80.
80.
So again, this is favorable by 40.
40.
40,000.
This is favorable by 40,000. After defense, we have government transition planning cost. Government transition. So government transition planning cost. So government transition planning costs. The budget was 10,000.
10,000.
They paid.
15,000.
They paid 15,000. So they paid more by 5,000, meaning that this is an advance.
Advance.
So after that, health.
Mm.
The budget was
201.
1,000. They paid how much? Actually,
120.
120,000.
so this is favorable by
90. 91.
90 on
81. 81.
81.
81.
Yes.
That is favorable. Then after health, we have housing. So the housing,
180.
the
180.
budget was 180,000. The actual
We paid 220. 220.
220,000.
Mhm.
Yes.
So that is more. That is
Advance.
advance by
40,000.
40,000.
40.
After housing, we have internal security. The internal security,
240.
the budget was 240,000. Actual,
300.
300,000.
so more, that is advance by 60.
Advance. 60.
Yes.
And others.
Others,
160.
160,000.
that is 160,000. Actual,
Actual 240. 240,000.
so this is more by
By 80.
80,000. So this is an advance. So you can get the totals. total. If I take 64 plus 40 plus 5 minus 5 plus 81 minus 100 The totals, like now here is this one is 0, eh? That is what I'm getting here. That is 0.
Yes.
600 plus 120 plus 10 plus 201 plus 180 plus 240 plus 160. So this is 1511.
11,000.
What about 536 plus 80 plus 15 plus 120 plus 220 plus 300 plus 240? The same as this one actuant.
Inakuja nini?
So remember that these are inflows, these are cash inflows, and these are outflows. The net will be, so 13 minus 15, 11. So we have a negative of the net cash for that one. And this one 14, 16 minus 15. This is 95, the net. And this one will remain to be 116, 1,000 favorable. So that is the budget preparations, budget preparations. The budget preparations according to IPSAS 24. So we have looked at IPSAS 1. Which are IPSAS 1? I looked at two statements. Those are the major ones according to your syllabus. Even if yes, there's other statements under IPSAS 1, but we don't look at them. But if needs be, I will look at them. But those are some of the main statements, the two I looked at under IPSAS 1. And we have looked at IPSAS 24. And that means that we have done public sector, international public sector accounting standards. So any question? We have come to the end of the session today. So if there's no another question, we meet next time when I will be looking at another area which I can be able to do, or which I will be able to consider to do this aspect of retirement, the retirement schemes. Like now, there's this question number 4 are sitting. Mazuri benefit scheme is registered retirement scheme. The trust of a scheme extracted the foreign trial balance. So you have statement. You are required to do statement of changes in net assets and a statement of net assets. That will be our next area in the next session. Have a nice night. See you next time. When we will be continuing with the same financial reporting and refer more of your colleagues to join this platform. We have not done much. There's those major areas like the groups we will be able to do. There's IS1. I mentioned about them. We'll be able to do everything anyway before August. So again, I can say good night. See you next time.
Thank you.
Yeah.
So we said I will share. May you please share that past paper in the WhatsApp group? I shared yesterday. It's only that maybe I can quote that this is the past paper. We said
I've seen it.
it's okay. That is good. Good night.
Yeah, same to you.
Uh,